What kind of guardrails do you have, Bud? What are some things that our listeners
Yeah.
can garner to stop falling victim to what we call the investor behavior penalty and this behavioral finance challenge that we all psychologically face?
Yeah. So I think the first thing you do is you make sure that your portfolio is you're not cobbling together investments based on performance, markets, stories, or myths, like what your buddy says at the club. Your investments are actually the last step of the plan, right? Like first, you're trying to get clear about what your goals are, and even under that, maybe what your purpose is. Like, why are you doing this in the first place? Then we can move up to an investment process that makes sense, right? Like a defensible investment process, not stories and myths or feelings or vibes, right? Then after we have an investment process, we can go to the specific products that populate that investment process. So once we build a portfolio that way, I just call that investing like an adult, broadly diversified based on goals. Once we build that, there's a couple things we can do. Number one, we can automatically rebalance, right? And whether that's based on some change in your portfolio, some percentage change, or based just purely on time. We can, number two, if we're still investing, we can save, we can have systematic investments. Like, why do I buy on the 15th of every month? Not because I think the market's down or up or down on the 15th. It's because it was the 15th. You know what I mean? Like, that's a pretty simple, why do you buy on the 15th? Because it's the 15th or the 1st or the 30th. The day doesn't matter. So we can have systematic investing. We can have portfolios invested like adults, right? We can rebalance in a disciplined way. If we do those things, those are they're like magic, right? Like all it really does is help us prevent the mistakes. And then the last thing we can do is, unless we do it for entertainment, right? Kind of like going to the circus, like turn all the noise off. But there's no reason, like the Financial Pornography Network waving its hands in the corner.
I love
does
that.
you does you no good, right? It does you no good. In fact, you want a surefire way to feel anxious. Make sure you check on your portfolio every day.
Well,
right.
And what's really crazy is the pace of information that comes at us in a day, right? I mean, I've got my phone sitting here. We're on this recording. I just got a pop up about a stock that I own. The market's going to close here soon, and everything is just such a real time, rapid pace fire to us. I feel like oftentimes it shortens psychologically an investor's timeline, and we deal largely with retirement at Allied Wealth. We help people get to retirement, but we also help them get through retirement. Okay. Yep. And one of the things we have to have a conversation about is, listen, when you get to the day you retire and walk away from your job, you got to figure out how to live the next 30 years without a paycheck and not run out of money or income in that process. So what that means is your investment timeline is not at the pace that news comes at you. It could be a 30 or 40-year investment timeline, and you should behave accordingly.
Yeah. And the best in those cases, assuming your portfolio you're investing like an adult, like we talked about, the best thing you can possibly do is ignore the news. Now, some people say like it's important to be informed or it's entertainment. Okay, fine. Just don't act on it, right? Like that's fine. But I actually think there's better sources of entertainment. Like movies are way better. There's good stuff on Netflix. Like I just think there's better sources of entertainment. So yeah, turn it off. Delete all the alerts on the phone. Don't look at it, because again, I hate to overuse Buffett quotes, but Buffett said the hallmark of his success was benign neglect bordering on sloth, right? So if that's what the greatest investor arguably the greatest investor who ever lived says, why are we checking every day? Like, you would never plant a tree. You would never plant a tree and then go dig it up every month to see if the roots are growing. You just wouldn't do it.
You wouldn't do that. Well, tell me this. Yeah. What are common ways emotions show up in financial decisions, like chasing safe investments or following the herd or chasing risk investments? Give me some ideas about that.
So there's a bunch. Like, even more fundamentally, there's a bunch of shame and blame that often shows up. And you see this often in I know it happens in my marriage, right? But you see this often with spouses or partners where somebody made a decision to invest or not invest. Right? There's a park not far from our house that on the outside of this park was a development. When we were first, 20 years ago, the developer who was developing these building lots had the first 10 were like on sale back in the day. Like in Park City, you don't need to do this anymore. That's for sure. There was incentive sales. So we put an offer in on one and they accepted our offer. And then during the due diligence period, we realized like we couldn't afford it. Like it didn't matter how good the price was, we couldn't afford it. So we made a reasonable decision to not buy it. Well, that park turned out to be, like when we finally moved to Park City, that park turned out to be the neighborhood park for all the lacrosse games and all the soccer games my kids played in. So I got a chance to see that lot, 50 times a year when I'd go to the park. Well, it's at least 10 times more than our accepted offer was. Now, my wife and I, it doesn't matter, right? Because we couldn't afford it. We made a good financial decision. But I got reminded, so there was years there where there was some shame or some blame around that, right? Like, why didn't we? We should have. Okay, so that's one place it shows up. I think one of the big mistakes, especially when you talk about on the investing side, is, and we all fall prey to this, right? We feel loss much more acutely we feel the pain of loss much more acutely than we do the pleasure of gain. That's called loss aversion. We're all averse to loss. And so where that shows up often is we'll hold on to things long after maybe we should sell them. Like we may have a situation where somebody bought some tech stock years ago. It's gone down. It's no longer appropriate in their portfolio. They've come to meet with a real financial advisor. The advisor helps them understand, here's how your portfolio should look. But there's this one stock. It won't sell it. Why? Because selling it means actually like coming to terms with realizing the loss. When we understand that these are normal human feelings, right, we can give ourselves permission to feel them and then do the right thing anyway. And so we could go on for hours about all those different things, but I think loss aversion. One last one. The way that, and this is true of men and women, but the research actually shows, this isn't a sexist statement, the research actually shows men fall more prey to this than women do, and it's confirmation bias. So anytime you hear something like on the internet, here's how we make decisions. We make a decision, and then we go do our research. And our research consists of gathering evidence to support what we've already decided, right? And summarily dismissing anything that disagrees with us. So you hear something from your buddy about an investment idea. You go on the internet, you gather up information to support what you've already decided you're going to do. And anything that disagrees with you, you dismiss. Well, that's called confirmation bias, and that's also a huge problem.
Subscribe to Redefine Retirement on YouTube, Spotify, or wherever you listen to podcasts.